Good morning, everyone. Welcome to day 2 of the Governmental Accounting Standards Advisory Council. Great discussion yesterday, great dinner. As always, it was just such a rich experience, and I'm looking forward to the discussion today. We're going to jump right into it, and I'll turn it over to Alan for the report of the Director of Research and Technical Activities.
A lot of words, Rob. I will echo what Rob just said. I really much express our welcome to day 2. I thought yesterday was great. You know, there was a point yesterday where if some of y'all don't know, we had the agendas timed, and there was a point yesterday where we were not on schedule. But the interesting thing is we weren't on schedule because we were having really good, nice, robust conversations. And I said this to the executive committee this morning. If that's our problem, let's have that problem every single time, right? If our problem is we're starting to get behind on the schedule because we're having really good, robust conversations, I'd love that every single time. Right, so we worked through it, and I appreciate everybody being flexible yesterday and working through it. But I think that's pretty amazing. I will also give a little bit of a shout out to our 4 new GASAC members. I've been a part of GASAC, so probably going back all the way to 2015. I don't know if I remember a time where we had 100% participation from every single new member. That's pretty amazing, because I know when you get in this room, it's a little intimidating the first time you're in this room and you're sitting here and you're talking about topics and you haven't been in the room the whole time and you're trying to get up to speed on what the papers say. But all 4 of the new members actually contributed yesterday. And so I think that's incredibly amazing. And thank you for them, and thank you for them having the confidence to communicate. I do think that says something about this room, right? And it says something about the fact that somebody said this yesterday, and I'll attribute to Linda, you're disagreeing without being disagreeable. And I think that's really important for this room. And so we appreciate that, and we will continue to always appreciate that. I'll touch on a couple things. Mainly, I'll touch on the things that our chairman didn't cover yesterday, which is why I go second. So make sure I don't say the things he wants to. The first thing I'll talk about is this, the TI stats. And I'm going to draw your attention just to one thing on the TI stats, that there's a typo in the stat report. If you look at it and you looked at what the biggest topic that we had TIs for last year, you would look at that and it would say governmental funds, and you'd ask yourself, why did governmental funds all of a sudden become number 1? It didn't. If I told you that really should have said compensated absences, you look at that and go, oh, because what were we implementing in 2025? Statement 101, compensated absences. And if I told you that was the most talked about TI we got, you look at that and go, makes perfect sense. So I think if you just look at that TI report with that lens and realize that governmental funds was not number 1, it was really compensated absences, then I think the TI report makes a lot of sense. It's very normal, for those that haven't seen the TI report, it's very normal for newly issued standards, right, in the year they're being implemented, to pop to number 1. And a year or 2 after that, they'll pop down and they'll get into a more stable state. And so I'd expect 101 and compensated absences to surely decrease. And I'd expect things like 103 and subsidies and things like financial reporting model to increase. But just want to draw your attention to that one thing on the TI report. Talk about some of the things that Joel didn't talk about. First thing I'll probably touch on is something we're going to talk about a lot today just because of the prioritization, but talk about digital assets. We've had digital assets as a monitoring topic for a while now. As many of you know, we put it on there a while back. Probably at that same time, FASB put a project for digital assets and cryptocurrency on their agenda. But for them, that was about intangible assets and impairment of intangible assets and the ability to write down and not write up their cryptocurrency. At the time, we didn't really have a concern with that because most pension funds actually held cryptocurrencies in their pension portfolio, and therefore they were probably investments, and we have Statement 72. So we had guidance on how to actually value cryptocurrencies because they were mostly being held as investments. Now we kept it as a monitoring product because we were worried about, well, when does it change from not being investments? And for a while there, it was about, well, we're going to have taxpayers be able to pay their property taxes or their income or their property taxes in cryptocurrency. There are some municipalities that allow that. What I will tell you is the ones that do have a third party involved, and you've heard me say this, and that third party actually takes the payment from the taxpayer, converts it to US dollars, and gives the government US dollars. So in that sense, the government only ever got US dollars. Still not a project. And then you hear about stablecoin. And you hear about the fact that Wyoming has actually created their own stablecoin. It is actually marketable. It can actually be bought right now. And then you hear about New Hampshire and the bond deal they just did where they basically collateralized debt with the collateral for that being cryptocurrencies. And so we're probably getting to a place where digital assets is probably moving to that world of maybe it's more than just monitoring, and maybe it should be more than monitoring. And you might hear us and the board start talking about whether that's because there's time for things to be monitoring and come off monitoring and just kind of go away, and there's time for things to be monitoring where maybe it turns into something. And the stablecoin conversation might be the point at which we're starting to get closer to the other conversation. Because there's a lot of things when I start thinking about what Wyoming's doing, I start thinking about there's a lot of conversations with that about what we might need to do. So I say that about digital assets, and we can talk more about that this afternoon. One of the other topics that weren't talked about was the Con 7 review related to pension and OPEB. I don't think we're talking about that today. That continues to be something that continues to be a pre-generated research project we're working on. It continues to be very important. I think the project team is making a lot of progress with that. They're doing a lot of effort and a lot of research to try to make sure we do understand how those pension and OPEB disclosures are being used in a meaningful way for making decisions and assessing accountability. It is not a simple task to go to try to gather that information, but they're working very hard to do that, and they're going to work the rest of this calendar year to do that, to ultimately get the board some kind of report on what we believe we gathered in terms of that information. So we're not talking about it here today, but I think it's continuing to ongoing and continue to move forward. There's really no order of these, by the way. I'm bouncing between pre-agenda research and monitoring. I could have ordered them probably better, but sorry, I was doing this top of mind, just free flowing at top of mind today. One of the other monitoring products we won't talk about is environmental credits. We're going to continue to monitor that. To a certain extent, we continue to believe it still tends to be a West Coast, Oregon, Washington, California, mainly focused concept. And while we thought it might be growing, I don't think it necessarily has at this moment. So we're going to continue to monitor that and stay on top of that. And at some point, we might need to do something with environmental credits. Another topic that we talk about a lot, not really monitoring or pre-generated research, is this idea of materiality. We've talked about it with y'all before. We've talked about it. We brought it up before. The GFOA has really gotten on board with this idea of materiality. And California CSFMO, which is the California GFOA, has got a white paper they're probably about to put out on it. It's really just trying to give, I would argue, the local governments and preparers mostly an understanding of what it is and how they could use it. And so we've been in those conversations. We'll probably still be in those conversations. We're not the ones writing the papers. We're not the ones providing the guidance. But at the same time, we like to be in the room when they're talking about those topics. And you might continue to hear that topic brought up. As you know, we've got the materiality box in every one of our statements. And so it is a relevant conversation to be happening. But in a world where we continue to hear, I have limited resources and I have too much work. And then you ask them, how are you implementing materiality? And they go, what do you mean? Well, there's an opportunity there that they might can discuss with, which of course Kurt turns into, please go talk to your auditor. Because I think having them in that conversation is extremely important. Another topic, another monitoring topic would be the use of technology in governments. As you know, when we moved the taxonomy project into a technology project, we added a monitoring activity related to use of technology in governments. And at first, when we first added it, some people were like, well, why do we need it as a monitoring activity? Can y'all go anywhere at a conference right now and not hear the words AI? That's the use of technology in governments. I mean, that's kind of consistent, right? I think what we're trying to do is make sure that we understand, whether it be cloud solutions or AI or agentic AI or whatever it might be, we're trying to make sure we understand how any of those realities, how any of those tools could affect governments and more importantly, could affect financial reporting. So I think it's very important for us to make sure we stay on the forefront of that, make sure we understand that. And so we're continuing to. Whether that ever turns into us doing anything like a project, it quite honestly might not. But we do need to understand how the technology is impacting the governments and impacting financial reporting, so it's important. The last topic on here is just, I'll touch on PR just very briefly. We're going to talk about the OPEB PR report later today, so I'm not going to steal any Tammy's thunder, so I won't talk about that at all. But we continue to move both the OPEB PIR, the fiduciary PIR, and probably the one that everybody's probably most interested ultimately is the leases PIR. We continue to move those forward and continue to work on those, and we're continuing to make good progress on those. And we will give you an update on the OPEB PIR later today. One of the things that we started to do with the OPEB PIR specifically, and we will do this ultimately with the other two, is not wait till we get to the end to tell you what we're finding. It is an iterative process and it takes a long time to do it. And so there's an argument that says, well, you probably don't want to wait till we issue a report to know what we're going to say, because there's steps in that. There's survey steps in that. There's archival research in that there's different steps along that process. We can give you readouts on where we are, and that's part of what we'll do with OPEB PR today. So we're looking forward to that. That is everything I had on my list, but I'll be glad to talk to anybody about anything they might want to talk about or any questions anybody might have.
Thank you, Alan. Any questions for Alan? Seeing none, thank you again. Always informative. So next up, we have the emerging issues. This is always one of the most interesting and really kind of, in certain cases, may even break ground on some issues that are that we are hearing with our constituency groups, as you're hearing, as you're engaging in your day jobs, and bringing it forward to the GASB and staff around issues that we think, or you think, could be warrant some time on the GASB's just to think about whether that becomes ultimately a project or anything. You know, this is on the forefront of any issues. So if there's an emerging issue that you have, that this is the time and space to share that. This is, again, always a spot where we have a lot of really good conversation and interest in things that might be facing all of us at some point in the future. So I'm going to open it up to anyone around the table that has something to share on an emerging issue.
I agree with everything you just said, Rob. One thing I'll iterate to that just to reinforce the importance of it. Just so you know, Lisa keeps track of every topic we bring up at this topic at every one of the GASAC sessions. And earlier this calendar year, when we were trying to put together the prioritization list, one of the things we did is we went through with her every single topic people brought up at the emerging issues discussions during GASAC and said, okay, they brought this up, we heard this, should we add it to this prioritization list? And so it is very important because it is part of one of the inputs to what's on the list we're going to talk about later this morning. So that's why it's important to don't think about, well, I said it and they didn't do anything. Well, no, it's being tracked, it's being understood, we're taking into consideration, and it very well could be these emerging issues turn into future potential products and or things that get on here that ultimately end up prioritize it, ultimately end up things we do. So it's important, even if you think it's something out there or something that you may not have heard about, it's important just to bring it up so we can hear it.
Scott
Deviney, AGA. Alan already took mine because I was going to say environmental credits, same speech as always. I heard this is more of a Pacific Northwest thing. So I have to admit, I am from Washington, home of the Super Bowl champion Seattle Seahawks. FASB has a project now. I'm just hopeful that'll maybe we can get to it eventually. Digital assets is not really a thing in my state, but you know, with our group, there's just a number of questions I feel that are piling up, and a number of them that have really easy answers, including the one that you just said, Alan. I think that there's value, even if there's not an immediate project for some big thorny stablecoin, you know, issue of putting out at least some TIs with those things. Again, there's value for people to be able to search a term and find guidance. And while us as insiders kind of know these questions, it's hard to convey that to others without something that's citable, et cetera. So, you know, just a few of those. Governments accept the digital currency with immediate conversion. Digital assets, are they considered a separate type of asset in GASB 72 fair value disclosures? What would be the valuation for the digital assets held either as an investment or part of seized forfeited property? I think FaceApp has a great technical bulletin on that. You know, how would stable coins be classified under GASB 79 criteria, which I could share some information offline if you're interested. That's all. Thanks.
Linda?
I almost hesitate to bring this forward, but my students in my governmental accounting class, we talk about student athletes. And we talk about where is that showing up on the financials? Is it showing up on the college and university? In the public setting, of course. Is it showing up on the financials or is it going to the foundations? So we've been asking a lot of questions in the classroom? Where is that information being recognized and how is it showing up on the financials? So that is definitely an emerging issue, and students, our future leaders in our world, are asking these questions.
Just to be clear, I think I know what you're saying. You're really talking about the NIL agreements.
Absolutely. Where are they showing up on financials? Are they showing up on the component units, colleges and universities, University of Texas, University of Tennessee? Are they going through the foundation? But the clear transparency of where that's flowing through the financials.
Chris?
Chris Clark, NCSL. I'm passing this along from my state's CFO. Clarification is needed on how to treat capitalization of items in similar categories that are purchased together but are used as standalone assets. For example, purchasing a batch of laptops or standalone pieces of research equipment at the same time. What is the guidance on how to address or modify the capitalization of individual pieces of that asset when they go bad and or retired, like a laptop breaks or equipment is retired? This has been raised by auditors as possible capitalization consideration. However, guidance does not appear to be clear.
Chris?
Chris Jumper, Bond Insurers. So you did hit on digital assets, which has been in light of the events of the past year. It's definitely become on the forefront, and just wondering how it's going to be addressed. The other things are technology and government, as well as the timing of audits. And again, as a bond insurer, we receive a load of documents every time we work on a transaction. The one that we can really count on and feel that has been providing us reality is the audited financial statements from the government. Having those as soon as possible, is critical. And that's my point.
Any other? Debbie?
Debbie Miller, National Association of State Treasurers. This is a unique one to the treasurers, and I think Joel may have already heard about this. But this was actually came from NAST leadership and GASB 21 and escheats, and that includes unclaimed property. There's legislation that's going on in certain states where they wanted to take ownership after 10 years. I think there's misunderstanding around that. When I was talking with them about it, I'm like, is this just an educational issue? Do we need to educate people about it? Do we need to have GASB look back at Statement 21? They were like, a little both, but probably mostly education. So I may be tapping in and asking for y'all to maybe help educate the treasurers about this project. Well, this issue, I will say, not project. So anyway, wanted to pass that along. Thanks.
Yeah, thanks, Debbie. I've talked to Sean, and we're available to help with education if needed. I do think some of it's more a legal issue than an accounting issue, but we're happy to describe the accounting and talk to them about those kind of issues anytime. And same for you as you're connected through NAST or your groups.
All right. Last call for anything else on emerging issues. All right. Thank you, everyone. Next up, we have the technical agenda prioritization exercise. I'll turn it over to Lisa.
Good morning, everyone. Just what you have been waiting for, chomping at the bit for this prioritization exercise. First, let me say thank you for being kind with my badgering to get this information submitted in such a timely and way that we could possibly be able to go through this exercise this morning. As you saw, a little bit of a different approach this year than what we have done in years past. In years past, you were used to seeing the Excel spreadsheet where you ranked 3 projects as a high priority and 3 projects as a medium priority. Well, this year we decided to shake it up and make it a little bit virtual so that you basically completed a survey where you gave us the 6 projects that would be top priority, a maximum of 6 projects. And then we asked you to actually list them in order of priority, give them a priority assignment of 1 through 6. Of course, you didn't need to give us 6. It was a maximum of 6. So as you know, right, and I want to stress this again, it was on the survey, it was in the documentation that accompanied the survey. The way you prioritize these projects for us are not things that you go, oh, that's happening out there in my space. This would certainly be nice to know. These are things that you are directly telling the GASB. If you prioritize them as a high priority in your 1 through 6 category, you are basically telling us today that those are projects that you want the GASB working on. You want us to exhaust resources in working on an issue specifically related to those projects. And you saw in the attachment that accompanied the survey was a write-up of all of those projects, what the scope might look like for those various issues. So make sure you keep that in mind. One of the other things that we tell you every single year, and for the new folks in our orientation that we had on this process, is that when you submit those priorities to me, they are not carved in stone, right? Because we realize yesterday at the GASAC meeting, we had some great discussions around some of the very projects that are on that potential project list. As well, today, when we go around this table, you're going to hear some of the other GASAC members explaining why they thought a project was a high priority. Linda may say something, and sitting near her, the light bulb might go on of something that I didn't consider or that I might have forgotten, which makes me want to change my priorities. And so as we go around the table, yes, I have what you submitted to me for this prioritization, but certainly feel free, based on what you heard yesterday and what you hear your friends say today, to change those priorities. That's one of the beauties of doing it with that survey instrument, is it's going to make recalculation of those projects that rise to the top a lot easier, because we can pop into the survey tool, make these changes, and push a button and get the new results based on this discussion. What will also happen as we go around the room and everybody gives us their priorities, at the very end, once everybody's had the ability to speak and let all their friends know what they ranked and why, I will then ask whether anyone, again, at the end wants to make any changes, because if Linda's first, she doesn't get the benefit of everybody that follows her in making her final determination of what are the highest priorities. So that's how we'll approach this. As you know, this is the only time in all the agenda items for GASAC meetings where we will ask everybody to speak. Usually it's raise your tent and we call on you when you have something you want to say. But for this exercise, Rob is going to go around the room and call on every single person to present their prioritization and why. Sound like a plan? Okay, excellent. Now, Rob, because Linda to my right is brand new, I think I'm going to start on my left, if that's okay. So that would put you in the hot seat.
Hey, Lisa.
Yes.
Can I just say one thing? Because
Sure.
I agree with every single thing you just said. What I would ask everybody in the room is, just as you go through, think specifically about cyber based on what we heard yesterday. Because without going too much into too much detail, based on yesterday's conversation, you might not think cyber would be in the top 5 priorities that people want us to work on. But the results might suggest that is true, that right now it might be in the top 5 of priorities you want us to work on. And there's a little bit of you look at that and there's a disconnect. So as we go around the room, if you happen to rank cyber, just think about yesterday's conversation. And do you feel like, okay, maybe based on yesterday now, my vote that I had is different than maybe a vote I would have now. Because that's just one of the things to think about.
Thank you, Alan. Thank you, Lisa. For NASAC, our top priority was digital assets for many of the reasons that Alan laid out before. The other item that I would offer up from the conversation that my subcommittee had was there are seizures happening of certain digital assets, and what's the appropriate accounting and reporting and treatment related to asset seizures. Number 2 was GAAP structure. We know that's a item that's on the discussion for today, but looking at how GAAP is promulgated and what a future state might be with the dual authority approach that we have. Number 3 was transactions with characteristics of both loans and grants. This is a pretty prevalent issue with some of our economic development entities for state governments, and so looking for guidance there. As it was written up in the paper, when we have these agreements that are structured where the outcome is we want them to be forgivable loans, but there are strings attached, and so what's that point at which we possibly change the accounting? Number 4 for us was environmental credits. Alan laid it out well in his comments earlier today. Definitely an issue out west. Financial reporting entity statements 14, 39, 61, 80, and 90 was our 5th. Just know that this is an area that you get a lot of technical inquiries on. I think there's somewhat of a complex approach to figuring out what the financial reporting entity is. So that was our 5th option. I think especially for state governments, there's so many different layers in terms of when something's a component. Are they blended? Are they discrete? Are they a state agency? Are they just referred to as a related entity? I think especially on the state side. And then lastly, the governmental fund financial statements, as it was written in the paper, is there some targeted opportunities for consistency on some of those items that were peeled off from this financial reporting, what became Statement 103, the project with those as they got peeled off. So those are our 6. And I will then turn it over to you, Harriet.
Thank you, Rob. So our first one was in-kind contributions, contributed services, and non-monetary interlocal agreements. That was also our number 1 last year. So 2 years in a row, our group wants the same thing. And it's really because there's a lot of things that are done that way. Parks Department, school districts, animal shelters are examples of government organizations that receive a high amount of volunteer hours or donations through Amazon or teacher wish lists that aren't included in inventory or recorded in the government's financial system. So it makes it a little bit riskier for fraud, but also how do you account for them? So if the government loses the benefit of those contributions and services, the public needs to know the potential value of those so that in case the government needs to provide those themselves. Second one was government fund financial statements, and very similar to what Rob said. So I'll move on from that one. Digital assets, which was also on our list last year. Again, as government agencies increase their use of digital assets, it's becoming more important for them to have guidance for how to accurately account for them in their financial statements. Environmental credits. So again, another Northwest person here. The need for guidance on this is becoming more important as governments make greater use of environmental credits to offset the impacts of climate change and the increasing emission of pollutants into the environment. Our 5th one was the statistical sections from Statement 44. The statistical section is intended to provide context regarding the government's economic condition, but it's been more than 20 years since the statement was issued, and it's never been reevaluated to determine if it's meeting that objective or if other information should be reported. Although there's an average of only 2 technical inquiries annually about the statistical section, the fact that there are still inquiries 20 years after its effective date is another indicator that maybe Statement 44 is likely due for reevaluation. And then our number 6 was conveyance of intangible right to use assets. And that's new on the list this year. And although I don't know the extent to which governments convey the right to use assets, it seems it's important to know the extent of that, to know if the existing guidance for donations of tangible capital assets is applicable for these intangible capital assets, or if additional guidance is needed. I think it's also important because some stakeholders have identified how to account for these as a challenge when they occur outside of an exchange or exchange-like transaction. So having guidance would ensure reporting that provides greater transparency and accountability. That's it. Thank you.
Chris Jumper, bond insurers. So my first was revenue expense recognition. And again, as a user, this is key to us, making sure that we're getting it right, fully understanding the changes and the impacts that are going to be coming from this. The second was GAAP structure. As previously mentioned, understanding the clear guidance and foundation, we feel this is sort of a foundation issue. The next was transactions with characteristics of both loans and grants. We do see a lot of either federal or state revolving fund loans, federal EPA grants that, are provided or that also have forgiveness issues, and just trying to understand, what the impact could be. Digital assets was my number 4. For all the reasons that we've already talked about, the emergence of stablecoin, the integration, throughout the revenues. It's not just an investment anymore. Use of technology in governments. This goes to my my issue about the timing and being able to get, using AI and integrating that. And then I did have the cyber risk disclosure. I still think that's a huge issue that is only growing.
David Goldman, National League of Cities. So our number 1 was pensions and OPEB. Tracking and amortizing deferred flows for OPEB benefits is, well, for cities, it's pretty burdensome, pretty complex, and could result in significant third-party actuarial fees. And this topic is our highest priority because, establishing a more practical method could potentially result in immediate cost savings for, the city's taxpayers, and also provide elected councils and commissions with a bottom line number they can better wrap their heads around. Number 2 is that cybersecurity risk disclosure. Basically, it's the same thing that we talked about yesterday. It's a critical, issue, of course, having cybersecurity in place. But we just have to understand that we don't want to provide a roadmap to any threat actors, by putting disclosures out there. Next was the governmental fund financial statements. From the perspective of elected officials, the governmental fund financial statements, which rely on the modified accrual basis, are some of the most critical pages in the financial report because they tie directly to the annual budget and show the actual sources and uses of taxpayer revenues. So prioritizing some targeted improvements in this area without, throwing out the model entirely, of course, but just some targeted improvements can help elected officials better understand and make, better budgetary decisions. GAAP structures next. Right now there's the dual authority, and, we could look up information in both areas, but we can just have like one authority where we can just go in, and maybe it's more advanced where you can do like a little chat thing and type in your question and it kind of finds the answer, or at least tries to help you find the answer. With technology that's around nowadays, that would probably be helpful. The 5th one, we got fund balance, re-examining statement 54. The current classifications, restricted, committed, assigned, those are important, but we want to also make sure they're not overly rigid. We want to ensure that the standards accurately and practically reflect the true availability of resources elected officials have at their disposal, and resolve any ongoing confusion over, stabilization arrangements or minimum fund balance policies. And then finally, we have the financial reporting entity, the re-examining statements 14, 36, 61, 80, and 90. Local governments frequently operate alongside complex component units like, housing authorities, economic development corporations, and the like. Simplifying these rules is a pretty high priority because it'll better ensure financial statements clearly reflect the primary government's true financial accountability without having too much extraneous clutter. So that's it.
David, can I just ask you a question? And I'm not challenging your prioritization rankings at all. It's more just for me to understand of 2 things that you said that I just want to make sure I understand. So by ranking cyber as your 2nd highest priority, but then I think I heard you say, but being mindful of the discussion yesterday and the risks associated with that. So I just want to understand, because When you're saying number 2, right,
Well-
that's telling me, holy cow, you want us to work on that.
Now, I'm just reading the rankings as I ranked them a few weeks ago.
Okay,
If I had to redo my rankings today,
yep,
this would probably drop much lower.
okay.
Yeah, based on the conversation we had yesterday and the direction that it was going, but I didn't want to deviate from this document that was
Okay.
provided. I thought like the auditors would get on my case because
Ah!
I didn't
So-
have any backup to.
So here's the deal, right? The auditors haven't seen that. The only one that's seen it is me, and I'm giving you permission because
All right.
what I wanted to make sure we conveyed is that you have the ability to change those, and that's what I suspected. So I didn't
Yeah.
mean to call you out, but I just wanted everyone to know that you have the ability to make those changes at the table right now.
I have the
'cause
power.
You have the power.
So let's make it lower.
Okay, so would you put that off the list
7,
totally?
Number 7.
Okay. So that means off the list. Yeah, exactly. Okay, excellent. Thank you for allowing me to use you as the guinea pig.
Used to being a punching bag at work too. So.
All right. Kimmy Ellen, NABA Inc. So I have the power and I'm going to change my rankings. I took one off and I added one on. So digital assets still continues to be top priority for all the reasons that we've been talking about for the last day or so. It's just there's so much inconsistency among our members, among our clients, and that remains pretty high on our list. After yesterday's robust conversation, I am moving revenue and expense recognition note disclosures up to 2. Anything that warrants that much conversation to me says that's a very important topic. And so it was on my list, but a little bit further down. And I'm making the executive decision to move it up. In-kind contributions. This is so very inconsistent among so many of my organizations. And that is definitely why it continues to be pretty high on our list. Use of technology. I feel like sometimes we have organizations that are still using DOS computers. A lot. I mean, and others that are using 16 column green paper. So, and I need them to use technology. So I just think it's a across the board issue for so many entities, especially our governmental entities that don't have any money to upgrade. And so what I'm finding is that they're more susceptible to cyber attacks. They're losing data. They can't start their audits because they've lost 3 months of data. It's been so inconsistent. Environmental credits, actually, we had a couple of our firms that asked that we, not our firms, but our members that asked that we move that up. And they are in more areas across the U.S. that have these issues. We don't necessarily have it in Illinois as much, but I know that a lot of our states around the outskirts of the country have talked about this. And then finally, number 6 is government fund financial statements. Talking really about receivables, the long-term measurements. That is why that remains on our list. And that's it.
Debbie Miller, National Association of State Treasurers. So it's my turn. So first on our list is digital assets. This is carried forward from last year. Not only from investment standpoint, we've talked about crypto, but also, payment areas. We're seeing things in precious metals that was mentioned. So that remains, digital assets remains the top of the list. Not only for investments, but for payments and that kind of thing. So second on our list is derivative instruments. Specifically information around investing in derivatives and more information about hedging was brought up. This also was a carryover from last year, not a change there. Third on my list, our list, were post-employment benefit plans and reporting investments in master trusts. This is, again, one of the same topics from last year. Talking about mutual funds in pensions and related to the ACFR. Mostly people are looking for more guidance. I am now going to pull an audible. Number 4, based on conversations, just overall, our group was interested in anything was OPEB pension related. But given the fact that we've already had one on there and there are newer projects or potential topics out there, I'm going to change number 4 to the use of technology in governments. If there's anything that states are looking towards is AI to help in all kinds of things. And I mean, our group, our state specifically was looking at AI and jumping at the bit, like really early on. And then like, okay, hold on, let's get some information. So I feel like guidance would be really good on that for treasures. So 5 and 6 are going to stay the same. This year, number 5 is external investment pools. All states invest in those and have their own investment pools. The SEC 2A7 requirements is what we pretty much follow. There is some concern from going from net asset value to fair market value. Net asset value, I believe, is the most common valuation method. There's some concern about having to change that. I don't know if that's possible or not, but there was some concern around that. And then lastly was transactions with characteristics of both loans, grants and loans, which I think comes basically from the federal governments and the funding that is and is not available and the questions around there. So those are our top 6.
Jamie Wayman, National Association of State Retirement Administrators, and I'm glad to know that nobody's going to audit what I previously put in because it's pretty different from what I'm going to talk about. So number 1 and 2 on the priority are related deferrals. I think reexamination of statement 63 and 65. I think there's a lot of confusion in the financial reporting community about deferrals, and it's somewhat concerning. But related to that is the pension and OPEB. Effects of deferred outflows and inflows and keeping up with those and what the impact is. And could we look at it to see if it's more expedient just to recognize them immediately? So that's number 1 and number 2. Number 3 is the AICPA auditing standards. It benefits every entity that prepares audited financial statements in accordance with governmental accounting standards. Auditing and accounting standards need to be in sync to mitigate divergent in practice and ensure users are receiving consistent information from financial reports. Number 4 is use of technology in governments. Again, similar to what Debbie said, I think every state out there is trying to figure out how to utilize AI to improve things. I mean, we're going through, in my state, a pension administration solution, putting in a new pension administration solution, and there's talk about how can we utilize AI to help with processing of claims, benefit, et cetera. So I think any direction on the use of technology in governments. Number 5, if I've kept up with my numbering right, is Social Security disclosures. I think from our perspective, from my perspective, one of the distinguishing things when you're trying to compare pension plans across the nation is whether they participate in Social Security or not, and having those disclosures so it's easy to see whether the state pension plan in this state is covered by Social Security or not, and for comparison apples to apples, I think would be very beneficial. And I think the 6th one is GAAP structure. Again, I think should seek to understand the trends in the area, given the changes in the accounting profession, and
looking at the GAAP structure and what's authoritative and not. So those are the priorities for NASRA.
Just as Jamie said, I'm also happy that no one's going to audit what I originally put down here, because I'm going to make some changes. So first, I think, listening to some of the discussions I've had with people over the last day, moving fund balance statement 54 to the top, I think there's a lot of inconsistencies on how that is treated, and to get a better sense of, it's one of the primary ways for us internally that we use to determine the credit quality of local government. And so having that being consistent is important. The same thing for the financial reporting entity. There's a lot of inconsistencies that we have seen on how this is reported as well, even within a same state. And so, getting some more clarity on that. Revenue and expense note disclosures. I've liked the discussions that we've had. And I think that is something, I think Chris brought it up as well. It is very important, and something I think I didn't have on my list to start, and really just listening to what Chris had to say about it made me want to put it back on our list, and at a pretty high level to that point. Digital assets is, wait, hold on. Government fund financial statements was 4. Digital assets being 5, for a lot of the reasons that people have already said. And then I'm adding statistical section because again, I think just listening to what people have said and the fact that it hasn't been looked at in 20-something years, is it still what was meant to be when it was put together? So sorry for all those changes, Lisa. But I think this is better reflects, what kind of the discussions and introing in my own head, like what we've been talking about.
Absolutely no apology needed. That's exactly what we want you to do. So thank you.
And eventually I'll get that survey thing working on my laptop.
Okay.
I guess I'm up. Same. I'm exercising, as some have described, the power. I'm adding a 6th, so I'll have 6 just to frame. I come at this where I've heard a lot of people talk about. I had this last year. We represent. I don't know what Sam Rippin, Association for School Business Officials International. I don't know what my predecessor put forward. So I'm coming at this cold, but with a fresh set of eyes. The things that overarch my priorities that I hope are ASBO International priorities, I guess by extension they are, is both clarity for people like me in preparers, as well as transparency for stakeholders. Okay, so the one I'm adding is actually my number 1, funny enough, is reporting unit presentations. And I don't think I've heard that yet from the group. What I wrote in notes here is I said, it isn't just the general fund anymore. With a growing scarcity of resources, public resources, governments need to rely more heavily on other funds, enterprise funds, endowment funds, grants, revolving funds, and stakeholders need to know how much these funds are relied upon and the solvency of said funds. I know to close fiscal year 25, I drew down a fair bit on those revolving funds. I expect I'm going to draw down a fair bit more. And I think people need to know, I'm not calling our place under severe financial distress, but we'll call it financial stress, not severe yet. Number 2 is, and I have heard, financial reporting entity, reexamination of statements 14, 39, 61, 80, and 90. And my notes here are, related organizations of governments, it's important to put that out there. I know in my particular municipality, we have our own municipal light plant. That people need to know, and that's a big entity. We also partner with the Department of Recreation for the state and operating on our high school campus a hockey rink. And so things like that is what's driving that prioritization. Third, and pensions and OPEBs, effects of deferred outflows, inflows of resources and on expense. My notes here are accounting for this is critical as it determines, at least as I understand it, what percent funded of the liabilities that are carried on the balance sheet. And I think having clarity with how that's defined is very important, in some standard of measure. If you're 80%, you're on track. If you're 20%, what does that look like? Number 4, fund balance statement 54. In this, I'm looking at the importance of disclosing, general funds unrestricted. After that, it could be partially restricted, totally restricted. I worked in higher ed where, endowments were a big part of but depending on the endowment, some are restricted very tightly, some aren't. So I think, again, this is an area that I felt was a priority. 5 is government fund financial statements. And, I think, I think others have talked about this, and I would concur with what was said. Lastly, I crossed it off, but now I had it originally. I'm having it back as number 6, is the in-kind contributions, interlocal agreements. I've seen those in my career. I think, coming up with a definition of, it can be material depending on the, how substantive these in-kind contributions are. And I think lately with the economy the way it is, we're seeing maybe more in-kind than cash on the barrelhead for contributions. Those are my 6. And I apologize for all the change.
Anita Kovacs Nakubo. And my first one is the GAAP structure. Anytime you have to list 4 and 5 different GASB statements to talk about the changes to GASB 14, it kind of indicates that you really need one place that you update all of your guidance in so that there's only one place to look. Because if we need to reconsider GASB 14 for the 5th or 6th time, it's really going to add just another statement that you're going to have to add to that. And I think that explains why GAAP structure, putting it in one place, potentially using technology to make it easier to find your answers, is why that's so very important. My number 2 and 3, really, I took 2 different things because I think they need to be combined. If not, they at least need to have effective dates that are similar so that the preparers have a better way to handle OPEB and pensions. We've obviously had a lot of people talk about the effects of the deferred outflows and inflows, and it's really we really need to evaluate whether deferring those expenses is really providing any value or not, or if you just recognize them at one time. So that needs to be done. But looking at everything related to OPEB and pensions through the eyes of note simplification, which is the concept 7, really needs to happen. Right now, for our state system, 25% of all of our notes are related to OPEB and pensions. And I don't think anybody understands or reads them. And I am a person, because I head up the state accounting committee for the Florida college system, I get beat over the head multiple times from the presidents because the trustees do not understand all of those notes, and they take such a space in the notes they feel like they should. And when you try to explain them, it's very, very difficult. So I think we really need to simplify and make it more understandable to the end user. I do think digital assets for some of your larger universities could be a priority. It's not so much for the smaller schools, but in certain areas that would be a good thing to look at. And that is a change for me. I added that one and took off the cybersecurity. But I also think, as my number 5, Social Security disclosures are very important. One of the cost savings measures that most colleges and universities use is we employ a lot of adjuncts. Normally, those adjuncts, at least in our state, and I think in most states, they don't belong to Social Security. We put them into alternative compensation plans so they don't participate. And then when we do get faculty from other states where in our state, you do participate in Social Security along with the pension, but in other states you don't. And trying to explain that, I think it should be out there so that there's comparability, kind of like what Jamie was talking about. As you move from state to state, you understand what you're getting. So I just think that is important. And reporting unit presentation with colleges and universities, you get a lot of hanging on different various organizations. We are a small school and we currently have 2 DSOs, and I'm picking up a fiscal agency that will have a reporting unit presentation because it's going to run all of the insurance for the state of Florida college system. And there's really no consistency for what they have to report in part of their what they give us as their component unit financial statement. And to answer your question earlier, how do the NIL athletes and all of that information gets paid? What seems to be the emerging trend is they're going to end up spinning off, making separate component units where that will be out of the sunshine, so to speak. And so some of these reporting unit presentations and having some criteria for those, I think would be very handy for those situations. And I think that's what you're going to see in the college and university space as it grows. So those are my 6.
Good morning, Barbara Baldwin, representing the National Association for State Budget Officers. Mine will be short. I only have 3. First is digital assets for all the same reasons many of you already stated. There's rapid adoption of digital assets, not just for investments, but also for payments. We see them as seized assets, even in donations now. And it's important to get some guidance in this area, especially with NFTs. How do we classify those? And I think with NASBO, what they're most focused on is comparability between jurisdictions. So that'll help with that comparability and consistency between the reporting of those. And then I have Social Security disclosures for the same reasons Anita and Jamie stated. It's difficult to do comparisons within compensation between jurisdictions, and it will better inform the users in those areas. And then finally, fund balance classification, the reexamination of Statement 54, which here again will help ensure that those fund balances are being used consistently within a government, but also between jurisdictions and how they're applied. Because when they're not applied consistency first within a government, it could lead to some, besides misclassification, it affects users and to determine funds available when creating new budgets. Also, it can affect comparability between jurisdictions.
Stephen Stewart, Governmental Research Association. I have one change to one substitution for what we submitted. So the first one we submitted was governmental fund financial statements, and this is to build on the work that the GASB staff has done already on examining the overall GAAP Statement 34. And while that research is still valuable and informative, I thought it would be a good time to complete that effort. My new number 2 is Social Security disclosures. For the reasons stated before, and we've recommended this in the past, it's an important piece of information for comparability. Number 3 would be pension and OPEB disclosures, concept statement number 7, also for reasons stated by others. Again, this is a important disclosure for users, but it could benefit from a fresh look to make sure everything is framed the right way and is understandable. Number 4 for me would be reporting unit presentations. Again, people have made comments about the importance of that project. Number 5 would be in-kind contributions. That project is, as others have mentioned, takes on importance in certain areas of government like recreation and other parts of local government. So that would be an informative project. I wanted to remove post-employment benefit plans, reporting investments in master trusts. That could be done at a later point. And my last one is the same as what we had, which is revenue and expense recognition for the note disclosures.
Good morning, Michelle Waterworth from the AICPA. Some of ours in our top 6 are consistent with what we've had in the past, and some are a little bit new. The first one would be one that we've rated highly the last couple of years, and that is the financial reporting entity, reexamining statements 14, et cetera. I think I've mentioned before that I think, in my opinion, this is one of the most complex areas that I deal with. And in fact, when we take on new clients, more often than not, we find ourselves relooking at conclusions. And those are very, very difficult conversations to have with clients. Misleading to exclude, I think, is used incorrectly. So I do think that this area is merited to look at again. Our number 2 item is on pension and OPEB disclosures, but running it through the lens of concept statement 7. Determining what really is essential in financial statements. In particular, is there a difference between perhaps what a pension plan should be reporting versus what an employer, should be reporting in terms of what the users deem essential. Number 3 is reporting unit presentations, which we've talked about in the past. It's seemed to have always ranked very high for us, and that is because it's very challenging when we have to audit a fund or a department. And there really isn't sufficient GAAP guidance in this area. And so there's a lot of divergence, a lot of complexity in that area. Number 4 for us was deferrals, looking at statement 63 and 65. Here, there's a couple different reasons. One is we see users continuing to have difficulty understanding deferrals and how to interpret them, how to use them in decision-making. But on the other side of the fence, we see preparers who want to throw a whole bunch of things in deferrals that aren't specifically identified in GASB standards. Number 5 is one that we have ranked highly in the past, and that is governmental fund financial statements. And that is just those targeted improvements to address a very finite set of issues that were raised in the past, including period of availability and long-term receivables. And then finally, because I represent the AICPA, I have to rank the AICPA auditing standards in my top 6. Appreciate, Jamie, that you didn't leave me hanging as the only one who ranked it in the top 6. Thank you.
Elizabeth Thomas, NABL. My number 1 is transaction with characteristics of both loans and grants for a lot of the same reasons that have been stated before. Number 2 is in-kind contributions, non-monetary interlocal agreements. Just seeing a lot more of these and getting questions about like where are they on the financial statements? Are they there at all? And then lastly, the use of technology in governments for what Alan said and others. Just I feel like maybe not states, but smaller governments just want the permission to use technology and want to know how. And that's it.
Good morning, John Lazuski, U.S. Conference of Mayors. When I have to look at the priorities, I have to look at how do we make them simple and clarify them for lay people, elected officials who are not accustomed to using these tools, on a regular basis. So the other priority, I think, for elected officials that are sometimes elected officials are reluctant is that they don't want to plan for long term and the long term implications of what their actions are. How is it going to affect their government entity as it goes forward? So my first one was for the government fund financial statements. Again, the one thing that our elected official wants to know when they get the financials is what's the bottom line, what's the unassigned fund balance, how much can I use next year to get what I need done. Revenue and expense, we talked about that yesterday. I think the bridge example was a good example because we need to be conservative. Sometimes we want to put in more revenues than what we're anticipate as much revenue as possible without necessarily the consequences if that revenue doesn't come to fruition. So that was number 2. Number 3, the cybersecurity. You put that down before yesterday's discussion. We were reluctant about the cybersecurity in there, so we want to take that out. Tax abatement disclosures. Again, that could be controversial for cities and local governments. And again, clarification and what the long-term impacts are. I'm adding, Lisa here, pension and OPEB plans. New York State right now is, we're going to elect a new governor and a new legislature this year. So our tier 5 and 6 employees, who are our newer employees, are heavily lobbying to eliminate tier 5 and 6, take back all of the concessions that were made 10 or 12 years ago as the people become closer to retirement. Our state controller has said publicly that he is raising the rates in anticipation of that happening. It's almost like he's given permission to the legislature to do it. But again, I think that the decision makers need to know what the long-term implications of that are and how it's going to affect each of our cities and our states. And the last one is the use of technology. One of the things I think governments are reluctant to put money into the use of technology. I started a long time ago with the big green pads, and we don't have those anymore, but we're not far away from that. So thank you.
Thank you, John. Just one thing I wanted to clarify, the one you said pension and OPEB. Were you thinking about that on the project that's looking at the note disclosures through the lens of Con 7? Or were you thinking about that through the deferrals and their effects on expense?
The deferrals and the effects.
Just wanted to make sure.
Thank you.
Scott Davini, AGA. Number one for us is gap structure. The project's already started. We just want to see it go forward. AGA has long advocated for move to codification just to make the standards more accessible to a new generation of learners. I like what Chris said about this being a foundational topic. I agree. I see it as a foundation for people, for processes, and for technology. Number 2 and number 6 were the pension ones. Number 2 was the deferred inflows and outflows, and then number 6 was the disclosures. Our perception is that these potential projects are just a result from the PIRs, and that we should follow through on that. We see opportunities to simplify, which are good. Number 3, environmental credits. You already heard me on that. Number 4, governmental fund financial statements. We just see an opportunity to just directly affect and fix several pain points and feel like it's in hand, and we should just do it. As long as it's the very targeted project that's described in attachment A. Number 5, digital assets. You already heard me on that. Thank you.
Carl Citron, insurance industry investors. I had ranked ESG first because I believe, being on a buy side, that environmental, social, and government risk are increasingly important and drive credit decisions. I recognize that some of it perhaps belongs more on the official statement side and not in financial reporting. The issue I have is that there are many issuers that issue bonds very infrequently. They don't have other disclosures, perhaps, that they put out. So it seems that the financial reporting would be a point that this could end up in, just something that I would like the organization to think about. I had ranked the OPEB and pension disclosures second. Similarly, here is the the recognition of this liability has definitely much improved, but on the note side, it's still sometimes difficult to follow. I looked at Chapter 9 in the in your report as an interesting topic to think about. It's currently maybe not as relevant, but it is something that could increase. And similarly to OPEB and other liabilities, it's good from bondholders' side to figure out where your rights are relative to others, and the liability side of the balance sheet and the disclosures around that is certainly useful point for us to turn to. I was somewhat modest and had left it at 3, but just having heard other people, I wouldn't mind just rounding out the 6. So I'd listed governmental fund accounting as a 4th topic of importance to me. We would primarily look at the general fund, but in part because the governmental fund accounting tends to be somewhat inconsistent across sectors and issuers. So any focus on that to improve that would definitely be helpful. 5th point I had now flagged was the financial reporting entities. Similarly there, again, our focus might be on the general fund, but in part because some of these component units are just difficult to follow. And then I just, as a 6th point, wanted to recognize the discussion we had yesterday around cybersecurity. I don't necessarily know that I have an opinion on it, but I do want to sort of recognize that other people feel it's important and highlight it as such.
Bob Scott, GFOA. I listed, sounds like the only one, Social Security disclosures first. And I did it because it's a slam dunk project. It's easy and will provide valuable information to users and other governments. This is 40-year-old news. With the Reagan bailout of Social Security in the 1980s, if you were in, you were always going to be in. And if you were out, you were allowed to stay out. So this is 40-year information, and yet it's incredibly difficult to find on a comprehensive basis. In Texas, there's an obscure state agency that administers the Social Security for the state, and you have to find that agency, and then you have to contact it, and it's very, very difficult to get a hold of. And it should be a very easy, simple project. Governments that are out of Social Security have used it to increase their pension benefits substantially. And governments who are in Social Security benchmark against the governments that are out of Social Security, a lot of times not even realizing that they're out of Social Security in order to increase their benefits. And just having that information would be very, very helpful. It's an easy disclosure. I think personally it was a GASB 68 miss and on disclosures, and I just think it's an easy project. The second one, and it sounds like I'm marching to a beat of a different drum, so I admit that, is tax abatement disclosures, Statement 77. Corporate welfare has become a way of life for local governments. Used to, the first contact of a prospective business relocating was, what's your labor market like? What land do you have? What sites? Now it's, how much are you going to give us? And with all the pressure from the state to reduce taxes, governments are cutting each other's throat to win businesses, sometimes not making very good economic decisions in terms of cost benefit to give incentives. And yet I do not feel that the disclosures that are currently required allow anybody to assess whether that's happened or not. I do not like the rule that you net abatements against your revenue. So if you give a 85%, there's a government in Texas that's doing this, sales tax abatement, you just show the sales tax you collect. You don't have to show the total and then the incentive expense. You just net it and nobody ever knows. And then you have an obscure footnote and you're done. And so I think that should be a priority because transparency, I think, would help create more reasonable balance in terms of the incentives we give to attract new businesses. The third was governmental fund financial statements. I think this was a commitment that GASB made that they would look at it as a separate project. And as long as it's just the tweaking, I said tweaking, didn't I? And of the current where it's not significant changes, but it's fixing all the abuses and all the problems and ambiguity areas that we all know about, then I think that deserves to be a fairly high prioritization. GAAP utilization, I listed next. And again, I know I'm kind of a lone ranger out here, but I listed that because there are a lot of governments that don't use GAAP because it's just too complex. And dare I say, big gap, little gap, streamlining, I think for very set circumstances, smaller governments, a city of 5,000 that has very little debt, they might get their financial statements out earlier. Or what I see happening, and it was eye-opening to me because I'd always worked for larger governments, but most auditors prepare the GAAP financial statements and they have to go through their independence analysis and everything. But the governments themselves don't typically have the sophistication to prepare GAAP financial statements. And I think timeliness has become an issue. And I think if you kind of looked at it as a research project of why aren't people doing it? Are there ways to make it more timely? All those things, it could be helpful in the long run. GAAP structure I listed as number 5. And the reason I listed that is because after GASB 68, I think there were 5 or 6 amendments within 2 or 3 years of GASB 68. And I was like, GASB 68 means nothing anymore. You have to look at the codification. And then last, I listed cyber security risk disclosures. I would drop the word risk. And the only reason I included it, and I included it as 6, is because it's such a hot topic. It's not going to go away. I continue to believe that a lot of current GAAP addresses cyber risk like any other risk, financial risk that we have. And I think some clarifications on what current guidance already provides in this area, and then what you should or should not say might be helpful to governments and the audit community in kind of knowing what the boundaries are for cyber disclosures, because they're not going to go away and cyber attacks and risks aren't going to go away. So we might as well address it in a very limited, focused way. And that's it.
Chris Clark, NCSL. This is coming from a state level perspective, and I am just the messenger, so don't ask me a single question. And Lisa, I am changing my ranking though. I'll leave cyber disclosures on there, but I'll put it last instead of first, and then everyone else will move up a slot. But as was conveyed to me, deferrals, statements 63 and 64. And these are for the reasons stated. Digital assets becomes number 2. Statistical section, sounds like it's time for a refresh there. Statement 44 is number 3. Tax abatement disclosures, I agree completely with what Bob said, is number 4. My state listed unusual or infrequent items. That's pretty vague, so I don't know exactly what that is as 5, and then cyber would be 6. Back to that unusual or infrequent items. My personal opinion, this is Chris now speaking, I'm wondering if that has to do with raiding Missouri to get the chiefs to move across the state line. It's a public-private partnership. It's a whole mess. One side is, woohoo, we got the chiefs. The other side is, you got taken to the bank. You're going to default on the bond, yada, yada. So how that plays out will be very interesting to watch. They moved about 15 miles.
Tyler Montana Prescott, NACO. Have a slight change in some of the order that I have. My first one now is going to be use of technology in government. I've been to 2 conferences this year, and the way that AI and all the technology is changing in government, I think that's something we need to look at. Second is digital assets for the reasons we've all discussed already. As we've seen it start in Wisconsin, I think it's only going to spread across the country. Third is going to be governmental fund financial statements. I think we need to focus on that and more consistency as it was discussed in the memo. 4, I had unusual and infrequent items. As discussed in the materials, talking about basically a lot of times people don't know, or it said in a lot of the surveys, people reported things that shouldn't have been, and some things that should have been weren't reported. Even at my level, I can tell you sometimes there's confusion on when to do that and when not to do that. I think some clarity would be good. 5, in-kind contributions and interlocal, basically agreements between governments. The value of those services is very significant, and as been discussed, with animal shelters or even in road projects we see in our area, and utility projects, there's some significant value there. And last, I listed the AI CPA audit standards, because I just think those are important to monitor. There you go, Michelle.
Hi, Linda Ragland. I represent American Accounting Association. So I'm going to put on our research hat that we wear. And if I was queen for a day, I actually had 8, but I'll stick to 6. And my order did not change. Deferrals ranks number 1. From an academic perspective in the conceptual framework, our accounting equation is different than the corporate sector. We introduced these 2 new items, and I can tell you, students are not getting it. They do not understand it. And anecdotally, when you go out and you speak to many, many people in the community, they also struggle. So when you think of the conceptual framework, I worry about the understandability, but I also significantly worry about the reliability of the information that's presented there. And research suggests that the bond market players, those folks out the market, are using the historical perspective and treating those outflows similar to assets and those inflows similar to liabilities. And that's not the spirit or the intent. Those outflows are just deferred recognition of expenses, and the deferred inflows. I mean, I could talk all day, but that really worries me because not just the usefulness, it's the reliability of that information. So that number one is strong number one. Number two, financial reporting entity statements 1439, 61, 80, and 90. Very similar to all the other comments. Clarity on those component units would be extremely useful in trying to dissect these financial statements. So again, building block, better understanding component units. Number three, reporting unit presentation. Operational accountability versus fiscal accountability. When we go to those fund statements, trying to dissect that information and the purpose and the spirit of them. So clarity on that would be extremely useful in terms of research. Number four is kind of my odd duck, the statistical section. I do lots of hand collection and pulling those ACFR reports and OS, and man, there is no consistency in what's showing up on the statistical section. Sometimes you can find per capita data, sometimes you can't, sometimes you can find unemployment. I mean, all these different stats, sometimes you can find them, sometimes you can't. There's no reliability on what's in there, so clarity on that would be also extremely useful. Number five, fund balance statement 54. Breaking out those components and unspendable would be extremely useful for us to dissect what's going on and what does a current mayor's office have to spend, what do they not have to spend. So that's a hard five. And I would really struggle because I believe cybersecurity and ESG really needs attention, but I went with the Social Security for our team simply because in a lot of our research, when we go out and we try to look at those long-term liabilities, we know pension and OPEB is the big player in town, right? But when we're trying to understand what the employee benefits are, it's really hard to dissect that. And as we know, it has long-term implications, societal implications, if Social Security is being offered or not. So trying to compare and contrast, and I'm going to team Tennessee TCRS, he and I on deferrals, but also that Social Security part is really important. Thank you.
Awesome. Thank you, everybody, very, very much. This is your opportunity. If based on any of the discussions and rationales that you heard, if you want to make any changes to what you originally presented. Excellent. We'll call it a wrap then for this exercise.
Thank you, everyone. I know a lot goes into that, a lot of reading on these materials that we do the first meeting of our of the year. So great discussion as always. Thank you for your time and effort in putting those together and sharing them with Lisa. We're actually ahead of schedule, so we thought we would take a 15-minute break. But before I do, I want to recognize a member of the GASB staff who's going to be retiring on Thursday. Scott Reeser, he's in the room. He's got over 15 years, as I understand it, in working for the staff here at the GASB, and he will certainly be missed. I know you've been a great help and a resource for me, and I'm sure many others around the room, and I know the staff is in the board is going to miss you greatly. So on behalf of the GASAC, thank you for all you've done. You'll be missed, and congratulations on your retirement. All right, so we will reconvene at 10:15. Thanks, everyone. So we were strategizing a little bit, and we are ahead of schedule. And so what we're going to try and do, we're move a couple things around a little bit, but we are targeting and being done by 2 o'clock. And so if you are one of those that were interested in what does this mean for your flight home and things like that, and if that affects your times, we're looking at adjourn an hour earlier, so 2 o'clock instead of 3. We've worked with Greta, and so for the shuttle and things like that. So things are moving. So just wanted to keep everyone aware of what's happening. We're looking to have, well, moving some things around, but with that, I'm going to turn it over to Lisa and Tammy to take us into the next discussion.
Excellent. Thank you very much, everybody. And so our purpose here in the next 45 minutes is to give you an update on what we've been doing with the post-implementation review of Statement 75. But before I do that, I just want to put a couple of things into context, because we've talked a lot this morning throughout the prioritization exercise about all of these projects that relate to pension and OPEB. And so I just want to make sure that everybody understands and can distinguish between the differences in these projects. So the first project that we've talked about was the pension and OPEB note disclosures, right? Pre-agenda research project that's basically looking at our existing disclosures for pension and OPEB through the lens of Concept Statement 7, because those standards were issued after the board issued Concept Statement 7. And when they issued that concept statement, it was with the mindset of, hey, there's going to be a second part to this, and we are going to find a way to go back and look at the existing disclosure requirements through this new essentiality lens, breadth or depth of users, and meaningful effect to the decision making or the assessments of accountability. So that's that project. That project stems from Concept Statement 7. We've also talked about a project on pension and OPEB deferrals and their impacts to pension and OPEB expense recognition. That was one that stemmed in the prioritization exercise as well. That project, really, I kind of look at it as an offshoot of the PIR efforts that the GASB has conducted related to pensions and OPEB. Pensions, we've already issued the final OPEB report. That work has already been completed. OPEB, we're going to talk about right now. We are done the actual research efforts. We're in the process of drafting the final report that the board will see at the end of the year. But I wanted you to make the connection between that deferral, that potential deferral project, which you're going to hear a little bit more about because it's on your agenda, and the Concept Statement 7 work versus this post-implementation review. So 3 very important pieces that are connected in many ways. Okay? All right. So with that, let's talk about the post-implementation review. First of all, it's important for us to be mindful of, why do we do a post-implementation review, right? And a lot of people, really, being out in the field as much as I am, don't even realize that we do this, that we look at our comprehensive standards once they've been around for quite some time, and we say, hey, did we meet the mark? Did this meet its objectives? Did the board's analysis of cost benefit, was it based on good information, and we came to the correct conclusion? Because if you know, right, when the board thinks about cost benefit, it's expected benefits and perceived costs. I think Alan said this yesterday, the key words there being expected and perceived. So the PIR is a way for us basically to test that. So we're determining whether the standard is meeting or accomplishing its stated purpose. We're evaluating the standard's implementation and its continued application costs versus those benefits. And we're looking to provide feedback to basically improve the standard setting process. The deferral offshoot that I talked about being the perfect example of this in action. So if you remember, a year ago, we came to GASAC and we gave you an update for the first time ever. We were breaking new ground here because we weren't waiting till the end of the post-implementation review. We came to you and gave you an update of the major activities that we had completed thus far. So we talked about the archival research. We talked about the initial cost survey. We talked about the roundtables that we had conducted, in which many of you seated at this table actually participated in. So we gave you an update on all of those activities. And at that time, we said to you, the last piece that we are now working on are the final surveys. So surveys of auditors, surveys of users, surveys of preparers, and that is the final piece that we're going to give you an update on this morning. One really important thing that I want to highlight on this slide, and it was a question that came up at our last update, relates to our outreach. Because the outreach, not only in this PIR, but in all the work that GASB does, always gets me excited. And you're thinking, well, you're already pretty excited, calm down. But what I can tell you is the outreach really gets me excited. And you can look here and see the magnitude of stakeholders that we've reached with this PIR. Yes, not every activity that we do touches every single type of stakeholder, but nonetheless, we touch every stakeholder type in one way, shape, or form, right? Whether it's an actuary, whether it's our auditors or the preparers or the users, some of them we touch, overlap with the activities, but we basically touch all of them in one way, shape, or form. The importance there being every voice has been part of this post-implementation review that we're conducting. All right, so this is the timeline. This shows you a little bit of what we've done over what span of time and how many users and preparers and auditors we've spoken to or communicated with as part of this outreach. You can see it started way back in 2020. This is a 6-year deal. By the end of this year in 2026, we are on track to provide the board with the final report updating all of these post-implementation review efforts. And of course, as I mentioned, our focus this morning is going to be on the work that we did in 2025, which we call the final stage 2 activities. And so as you can imagine, for someone like me on staff who's been involved with this since the beginning in 2020, when I hear that word final, that's why I'm getting so excited. This has been a really, really long process. But nonetheless, we're at the end of it here with what we did with these final surveys. So what was the process for these final user, preparer, and auditor surveys? Well, it started with the development of our survey instruments, right? What were the things that we wanted to ask our stakeholders? Then we went through a pretty extensive distribution process to get these surveys in the hands of all different types of stakeholders. Some of you here at the table were very gracious to assist us in getting the word out about these surveys to your membership. For that, I am truly grateful and can't say that we won't tap upon you again to do similar work, but we really appreciate your efforts there. At that point, once the surveys come back to us, there's a certain level of data cleansing. Not everybody, answers the questions appropriately. Or in other words, what I mean is sometimes they say they're a preparer or a user, but really based on, our research and what we saw, maybe they were a different type of stakeholder. So there's a certain level of cleansing that goes into the data. And then the analysis begins, right? That's where the fun really happens, where we start analyzing the results. And I certainly would be remiss if I didn't give a shout out to all of our awesome postgraduate technical assistants who really assist us with this effort. They're so great at creating charts and graphs and just really creative ways that we can wrap our arms around exactly what that data is telling us. So you can see here, these were the timelines in 2025 for how we designed, distributed, and then conducted our analysis. At this point, as I said, we're in the process now of really taking the results that I'm going to represent here for you all this morning, but tying that now to all of the other results from the roundtables and the initial cost survey and the archival work and literature reviews that we're doing of academic articles, Linda, that your friends have written about issues within this space. So now it's really trying to bring it all together. What I'm going to represent here this morning is not that final piece of the analysis of it all coming together, but rather what did we learn from this last piece, which was the survey work. So let's talk about first, who were the participants? 3 surveys, and here's what we had. For users, we had 35 users that ended up completing the survey. You can see we had a lot from our friends in the academic space. We had legislative and oversight analysis. We had bond market participants or analysts. We had some research organizations that participated. And then we had one that we categorized as an other, which honestly was like a citizen type user of the annual financial reports. When we think about auditors, we broke them down here by the types of firms. So in this regard, we had 94 auditors that completed the survey. We had local firms represented, national firms represented. We had governmental auditors, regional firms, and also some big four firms that had auditors that completed the survey. Preparers, this was our largest population, no surprise here. We had 140 preparers that completed the survey, representing states, cities, towns, counties, BTAs, colleges, universities, school districts, hospitals. Others were things like housing authorities and airports. So we really had the full gamut, as I like to say, of preparers of governments of all shapes and sizes that completed the survey. So I think preparers also were very well represented. Any questions about the process and the who before I jump into the actual results of what we learned? Absolutely.
I'll point out that in the surveys, as Lisa talks about appreciating the work that you all do and getting the word out about the surveys, I feel like we should also mention that we try to do our part in making those surveys efficient, logically flowing and all of that so that it facilitates some of that, so that we're not doing second, third requests for people to complete the survey. So when you distribute those out, know that we try to do our work on the front end to make those friendly so that you're sending them out to people knowing that you're not asking them to try to complete something that's not logically formed or is going to take too much time.
Thank you, Tammy. All right, so seeing no questions, we'll dive into the results. So we're going to talk first about what we learned from preparers and auditors. So for preparers, we asked about the average level of effort. And for this question, we had 132 preparers that provided us some input. And you can see we had a scale of 1 to 5, 1 being very easy, 5 being very difficult. And you can see, as we would have expected, in the first year, the initial year of implementation, wow, that average level of effort was quite high, right? It was at a 4.23 on average for preparers on that 1 to 5 scale. But in the years that followed, once we get more comfortable with Statement 75, you can see how that dropped down to 3.5, just above neither easy nor difficult, which quite honestly is what we would have expected. So then we said, okay, we're going to dissect this a little bit more, because that was at the preparer level very broadly. We want to look at this by sizes of government. And the way we're going to size the government is going to be based on the number of employees within that government. And we're going to look at it based on whether there's more than 1,000 employees, the bigger governments, between 100 and 1,000 employees, and then fewer than 100 employees. And again, dissecting it based on initial year of implementation and years following that initial implementation. And again, just like we would have expected, the larger the government, the less the average level of effort was, right? Larger governments, we think more resources, more capacity versus the smaller governments with less resources and less capacities. And this held true to that assumption that we kind of went in with before we saw any of the results. Also, you see here in that, after the initial year of implementation, that average level of effort in all cases gets reduced again in that range of just over neither easy nor difficult, with the exception of those very small governments where it's just below that threshold of difficult. And again, we would expect that for those smaller governments. Now let's take a look at the auditors. Again, we asked them a very similar question in regards to how difficult is it to audit the OPEB information. And we dissected this based on the number of audits that auditor conducted. So you can see we broke it out by, hey, do you do more than 10 audits? Do you do 6 to 10 audits? Or do you do 1 to 5 audits in the course of a year? And again, just like we would have expected, the more audits that an auditor did, the less difficulty that they reported in auditing that OPEB information because it was more familiar to them, right? They were conducting more audits in the course of a year, but the fewer audits that they conducted, you can see where that difficulty increases. But again, it's still hovering in all cases in just over that mid-range of 3, where it's neither easy nor difficult. So with preparers, we shifted to relevant effort, and we did this because we wanted to compare it to pensions. This was something that we had the advantage of with the OPEB PIR that pensions didn't have, because pension had already been completed. So we knew, right, OPEB, very similar in implementation in many respects to pension. We were able to make some comparisons based on the implementation efforts of OPEB versus pensions. And you can see in the majority of the cases, it was the approximate same level, or they actually said it was easier than pensions to implement. And again, we kind of expected that because pensions broke the ground and got them comfortable with it. And then OPEB came in after with concepts and provisions that they were already pretty familiar with. Only 32 of the 127 preparers said that it was actually harder than pensions. So again, like we did with the average level of difficulty, we did the same thing in regards to the comparison with pensions. And we disaggregated this the same way based on the size of government, whether there was more than 1,000 employees, between 100 and 1,000 employees, or fewer than 100 employees. And again, you can see the larger the government, the greater the percentage that it was easier or the same as pensions. Only with the smaller governments, you can see where they were actually presenting that it was harder than pensions in all cases. All right, we did the same thing with auditors in comparison to pensions with relative effort. And in this case, 89 of the auditors answered these questions. And again, here you can see pretty overwhelmingly how auditors reported that it was approximately the same level of effort, or in many cases easier than pensions, and in only 18 of those auditors representing that relative effort was actually harder than pensions. We, of course, dissected that as well in relative difficulty, again, based on the number of audits that those auditors conducted. And here you can see where there was a little bit of a skew in the data from what we would have expected in that mid-range from 6 to 10, right? That blue line is a little bit longer than what we would have expected. We would have expected it to be, just after that blue line for more than 10, but fewer than that blue line in the 1 to 5 category, because these auditors were doing more audits, but not significantly skewed from what we would have anticipated the results to be. And you can see in all cases that harder than pensions percentage was smaller than those that said it was easier or the same as pensions. Now, this is where it gets really fun. And for the board, our board members, I apologize because I got excited about this when I presented the results to our board about this at the last meeting as well. But take a look at this. So this is where we really line it up, OPEB and pensions. And the number of preparers that we had respond to these surveys and both efforts are pretty comparable. With pensions, we had 118 preparers. With OPEB, we had 109 preparers. But we asked them to rank the items, the major provisions within Statement 68 and 75 by level of difficulty. And so let's start at the bottom. So the difference is with OPEB, there were 8 items, and you'll understand why in just a minute. But with pensions, there were only 7 items. So lowest in the ranking of items of difficulty in both cases was discount rate, the provisions related to discount rate. Look what happens next. The next item on the OPEB side, coming in 7th, is the proportionate share allocation schedules for those governments that are participating in a cost-sharing multiple employer plan. Now for pensions, this one was a little higher in the scale. It comes in at number 4, but nonetheless, again, still pretty comparable. Look at number 6. Exactly the same in both cases. So the plan's fiduciary net position information comes in 6 in both cases. Number 5 for OPEB are the other assumptions. So this is the non-healthcare cost type assumptions. I've tipped my hat to what the extra one here is on OPEB. It's those healthcare cost assumptions. But nonetheless, you look at where it came in with pensions, and it came in 3rd. Again, pretty darn comparable. Number 4 for OPEB, but 5 for pensions is the required supplementary information. Again, very close. Here's where we sneak in the 8th item for OPEB, which is the healthcare cost assumptions, right? Because we know that's something that's unique to OPEB, not in pensions. Look at number 2 in both cases. So number 2, most difficult item ranked for both pension and both OPEB is the deferred outflows and inflows of resources. Hence, the next item that Emily and Tammy are going to be discussing with you, which is that potential pre-examination research project on deferrals. And then number 1 in both cases are the note disclosures. No big surprise here, right? Every person that I ask out in the field about note disclosures and what is the single largest real estate in their notes, everybody always says pension and OPEB. Hence the project on concept statement 7 that's re-examining notes. So then we did the same thing with auditors. We asked auditors to rank the items by difficulty. Again, very comparable groups here. OPEB, we had 90. Pensions, we had 93. So coming in 9th for OPEB and 8th for pensions was fiduciary net position, both at the bottom of the list. Coming in next for OPEB were the OPEB liabilities roll forward. And again, coming in next for pensions, the pension liabilities roll forward. Coming in next in both cases, discount rate. Next, the RSI schedules and the note disclosures. Next is the proportionate share allocations. I think we can say our auditor friends were very consistent, as we would expect. Now sneaks in the healthcare cost assumptions, right? On the OPEB side, because that, again, unique to OPEB. Now look what happens. Coming in 3rd, both cases, required notes. A little bit of difference here with deferrals. For pensions, that was number 1. And for OPEB, it came in number 2. And then the assumptions, the other assumptions, non-healthcare costs for OPEB came in number 1. And for pensions came in number 2. So the only slight change there with the auditors was the number 1 and the number 2 slot, just moving them 1 and 1, 1 and 2. The other thing we asked preparers about was, what do you use third-party assistance for? And we had 106 preparers that gave us some feedback on this. You can see the number 1 item that preparers need to get outside assistance for was maintaining those schedules for the deferred outflows and deferred inflows of resources related to OPEBs. Number 2 were the proportionate share allocation schedules. And number 3 were the schedules for RSI and related note disclosures. And then the fourth one was actually preparing the required note disclosures for their OPEB plans. And then there was an other category that was a whole caveat of different things, but nothing certainly rising to the magnitude of the level or the level of the 4 that we've presented here. We also asked auditors, how many of your clients receive third-party assistance, and for what are they receiving third-party assistance for? And you can see the big ones here again. All or more than half of their clients said overwhelmingly, in all cases, the top 4. In only half of the cases were those 4, very minimally represented. And then in fewer than half or none, in some cases, again, a very small number. So packing the punch here again, that these 4 items, the deferral schedules, the proportionate share allocation schedules, the note disclosures, the RSI schedules, being the heavy hitters here as to what preparers are seeking outside assistance for in the clients that these auditors were presenting. And those are the results for the preparer and the auditor surveys. Before I jump into the user survey results, I want to pause and I want to ask, does anybody have any questions about any of those results in the preparer or the auditor surveys?
Rob Weber, Bond Raiders. Lisa, this is very interesting. I did have one follow-up question for auditors and preparers, where, especially on the OPEB side, where municipalities particularly could vary very significantly in terms of their OPEB exposures and the amount of OPEB that they have to provide. And I think about, I always give this presentation every year at the New York GFOA about how New York's OPEB liabilities and costs are significantly higher than anywhere else in the country. I wondered, when you surveyed those preparers and those auditors, did you think about, or was there a breakdown of the complexity of how, a state like New York compared to a state like, I'm just using a local government example for this purposes, but a state like New York and a state like South Carolina, who has very little OPEB at all, how difficult that, or how much easier it would have been to prepare that OPEB liability and OPEB statement versus a state that has a high number of OPEBs?
So Rob, for purposes of these surveys, the way we broke it down was size of government based on employees. But what I can tell you is a big piece of the work that we did right up front was archival research. And so in that archival research, we gathered information on every point that was recognized, including the liability, on every piece of note disclosure. And so one of the things that we're trying to figure out how we bring together would be representative of the magnitude of those liabilities, the number of plans, the types of plans. We are armed with that information. It's just a matter of how can we make those connections between what we learned in the archival versus what we learned in this survey. Is that helpful? Great.
Stephen?
Stephen Stewart, Governmental Research Association. I just wanted to ask, I'm not sure if the survey gathered information on this, but the third-party assistance that was used was found necessary for deferrals and those more technical aspects of it. Do you know if the third-party assistance is that actuarial assistance primarily, given the nature of what is in the deferral?
That's a great question. Yes. So that third-party assistance some of it is actuaries, some of it is consultants that help them put that information together. And again, another piece of this, right, that we're bringing together was an initial cost survey that we did in the initial stages of the post-implementation review. And in that piece of the PIR, we actually asked, can you quantify for us what those costs approximated and where were they being, exerted? And some of them were to actuaries, some of them were to consultants, some of those costs were to their auditors for additional work that was being done. So it wasn't just one, it was a multitude of places.
Chris? Or I'm sorry, Bob.
I'm glad you asked that question because I had the same question in my mind. If you don't use the alternative method and you're hiring an actuary to do your OPEB valuation, that's just part and parcel with what you receive in the OPEB valuation. And you get the schedule of the remaining useful life and what the amortization period is. And that's just all provided. So I was a little surprised that was broken out separately because I always viewed the actuarial valuation and what you receive as part of that OPEB valuation as kind of a package deal of what you get. Now, whether they understand why they're putting in the notes, though, those deferred and why they're deferred for a certain period and all of that, that would obviously be a subject of discussion because I don't really understand it always, and I understand it more than a lot of people. And the amortization period, the remaining useful life to me has always been one of those things that has turned out to be much, much shorter than I was expecting.
Linda?
Thank you. Lisa, can we go back to slide 16 for just a quick second?
We sure can.
For clarification.
Oh, I got to go through all this action
I'm so
here.
sorry.
Oh, you're fine. There we go.
So are those, for the auditors who audit more than 10, 6 to 10, are those statistically different from each other? In your analysis, did you break it down to see if they're statistically?
I should have known you would ask that question. And when Lisa was talking about it,
the big gun.
and when Lisa was talking about it, I thought we didn't do any t-tests, Linda, to determine.
Okay.
We have done a few of those here most recently, but we didn't do one here. We could, but these are just raw magnitude differences. But we certainly have the numbers where we could look at those to see if they're statistically different based on the number
Size.
of audits that they do. Yeah.
Sorry.
No. It's a great suggestion. It'll be in the final report.
So the only question I had, Rob Hamilton from GASAC, is did you see much variability amongst that slide 15 and 16 where based on the responses? I know it's aggregated, but I'm just curious if there was a lot depending on the experience or the number of audits the respondents actually performed.
So I don't think we saw anything, Rob, that we didn't expect to see. It was kind of, as I said, the more audits you conducted, the less difficulty, the more familiar, the easier it was. The comparison to pensions made it easier. And that's kind of what we expected.
Sounds good. Thank you. All right, back to you, Lisa.
All right. So now let's talk about our friends, the users, and what their survey results look like. So the first thing we asked them related to their relative interest in pension and OPEB information, or just OPEB, or just pensions. Like, hey, Rob, what do you care about? Right? That's kind of how we pitch this. And you can see with 35 users being represented here, the vast majority of them had an interest in both pensions and OPEB. There was only a few that told us, hey, we only care about OPEB, we only care about pensions. The majority of them, as we would have imagined as well, really genuinely cared about both of them. So then we said, okay, we've got you. We know you're interested in the information for both, but tell us about where in the ACFR, which section in the ACFR are you interested in? In other words, where do you go to get this information related to pensions and OPEB? And you can see here, the vast majority, 27 of those 31 users that answered this question basically said, we go everywhere. We love the ACFR. We go everywhere. We're getting information not only on the face of the statements, we're going to the notes, we're going to RSI. Just a few users actually said, oh no, we only go to these two places, or I only look to the face of the financial statements for what is actually being recognized. So then we said, okay, let's talk specifically about the net liability information and the deferred flows information that you're getting in the financial statements. And in this case, again, very comparable responses. We had 33 users for pensions, 31 users for OPEB, and you can see a lot more users are interested in information related to the net liability than they are related to the deferred flows. It's almost in half of their interest in that those specific types of information. So then we said, okay, let's talk about alternative measurement method. Bob, you brought that up so nicely. So we asked all types of stakeholders, auditors, preparers, and users related to whether or not they use the alternative measurement method. So for auditors, it was, do you have clients? For preparers, it was, do yourself use the AMM? And for users, it was, do you use the AMM information to make decisions or assess accountability? And you can see that the majority said no. The majority of preparers said they did not use AMM. The majority of auditors said their clients don't use AMM. The majority of users said they do not use that information to make their decisions. And that's what we have for you for an update from the surveys. Let me pause here and ask, does anybody have any questions related to the user survey results or the alternative measurement method that we kind of snuck in there at the end?
Michelle.
Michelle Waterworth, AICPA. Just a quick question, Lisa. On slide 28, you talked about the user's information, their use of net liability versus deferred flows. Did you also ask about their use of pension or OPEB expense?
I don't think so. I don't think we specifically asked about that.
Okay, thank you.
But Michelle, I say that, right? We didn't necessarily specifically ask about that in the surveys, but what I can tell you is in the roundtables, we did get some information and hear from users, some specific, what I'll call little nuggets related to the use of pension expense.
Dave?
I think I'm sorry.
Sorry, Joel.
Do you mind if I follow up with that? I think it's worth mentioning, since we're at the GASAC, the Matt Harvey memorial request for pension expense, or for pension and OPEB expenses to be broken out from statement of activities. So I would tell you, at least from an insurance investor, at least Matt Harvey perspective, that the pension expense or OPEB expense is an important number that they would use in many ways, or in some ways, in order to understand fluctuations related to that versus everything else.
Exactly. And he was involved in the roundtable, so that certainly is in our
I'm sure he brought it up.
He did bring it up. Matt lives on. Yeah.
Dave?
Thanks. Dave Goldman, National League of Cities. So yeah, what stands out from the user data is, I mean, it's kind of a validation of what local governments have been saying about the deferred outflows and inflows. You know, they're one of the most difficult and burdensome tasks that preparers have to work on, and also the auditors, it was pretty highly ranked there too in the previous section. And the data shows that, you know, only 13 out of the 31, a minority of users, are actually using them for their analysis. So in addition, about the alternative measurement method, so my understanding is those are for the smaller governments, you know, less than 100. So I was wondering, since only 9 out of 135 responded, do you have a crosstab of that to see how many plan participants are in each one of the 135? Because maybe only 9 out of the 135 of the respondents were small government. I mean, I don't know without looking at the data. Maybe there's a reason for that 9, you know.
So remember that archival research that I told you about? We do have some of that in there because with that data, one of the things we tracked was whether the AMM was used. And with that, we have information that would allow us to size up the government.
Oh,
Bob?
Bob Scott, GFOA. Just to piggyback on Michelle and Joel's comment, as I was listening to the presentation, I thought this is a really balance sheet emphasized survey. It's not looking at expense. And I think part of it is because the expense is pretty much the Matt Harvey comment buried, and it would be nice to know, but it would have been interesting to see what users said. Do you use the expense number at all? Because of course, that's the whole reason GASB came up with the deferred inflows and outflows, was to try to moderate volatility. In fact, I remember the head of GRS, which is one of the biggest public pension actuary firms out there, he was telling me GRS, they have a defined benefit plan, and he was the head of GRS, and he said, yeah, we always add up 5 years worth of pension expense and divide it by 5 because of the FASB rules, so that we get more of a smoothing and trend data. And I think that's what GASB was trying to accomplish with it. I don't think the deferred inflows and outflows really work as intended at all. But again, for a variety of reasons, and I understand why people are confused about it, but the expense number is what would be would be impacted if we did something dramatic to inflows and outflows.
Harriet?
Harriet Richardson, Association of Local Government Auditors. I want you to go back, if you don't mind, to the preparer's use of third-party assistance. I was just curious if you broke that down the way you did for average level of effort, to see by size how many of those use third-party assistance.
I don't believe we did, Harriet.
Okay, thank you.
Any other questions?
I've got one more thing that I'll mention related to deferred flows. I think we'd be missing it too if we didn't share with you that in our search of the academic literature related to pensions and OPEBs, we've brought a lot of that information to bear in the OPEB PIR report. And there's one paper in particular that follows up, on these deferred flows that would tell us, in addition to the fact that users may not be using those amounts that are parked, as Bob described, on the balance sheet. In addition to that, the Reck and Ragland paper would suggest that the interpretation, and Linda, I think you mentioned this in your prioritization, but I think it has bearing here, that the way people are interpreting those is a question as well. So there's a use question, and then there's also an interpretation question too.
Thank you for that great work that we got to use in our literature review.
All right, back to you, Lisa.
Excellent. So the only thing I'll say to wrap up is that we are on track to to provide the board with a final report at the end of this calendar year. And so I suspect that GASAC may see one more update on this when it's final. I thank you very much.
Thank you. Appreciate all the work on the survey as well. It's great to have the visuals. It's very helpful. All right, so we are going to transition to the potential pre-agenda research project on pensions and OPEB related to the effects of deferred outflows and inflows of resources on expense. I think there's going to be a quick transition from Lisa to Emily. Take it away, Emily. Thank you.
All right. Good morning, everyone. I guess we're before lunch. So some of the discussions today have stolen a little bit of thunder from this discussion, because it seems like we have already heard some feedback from members of the GASAC through the prioritization, and Lisa has perfectly teed it up as we go into this discussion. But today, what we have for you is a draft pre-agenda research proposal related to the deferred outflows and inflows for pensions and OPEB. And the reason that we're bringing this to you today is that the expectation is that in May, the board will consider a proposal for pre-agenda research and whether that should be initiated as part of their discussion of their technical plan at the May meeting. So we are hoping to get feedback from you guys so that that can help inform their considerations about whether a pre-agenda research project should be added to the technical plan. So that's the purpose today, is to get input on whether the board should initiate this research. Specifically, the research topic is related to deferred outflows of resources and deferred inflows of resources related to pensions and OPEB. And the primary objective of this research would be to analyze the degree to which pension and OPEB expense would be different if the changes in the pension or OPEB liability that are currently reported as deferred outflows or inflows are or would be instead recognized in pension or OPEB expense immediately. So currently, as you know, some of those changes in pensions and OPEB are recognized or reported as deferrals and then recognized in expense over time. This analysis or comparison would be focused on looking at what the effects would be if those changes were instead recognized immediately when the changes occur. The research overall would be intended to support a potential future evaluation by the board of whether there could be any practical expedients to the existing recognition approach that would reduce both costs to preparers and auditors without significant changes to the information that's currently provided to users of government financial statements. So this specific research is pretty narrow in scope. We've heard a lot about deferrals broadly. It would be narrow in looking at only comparing those measures of expense. So I'm going to talk a little bit about what this research is not intended to do, just so that we're clear. So first, it is not intended to re-examine the conclusions that were reached in the pension and OPEB standards. The changes that we are proposing to analyze meet the conceptual definition of deferred outflows of resources and deferred inflows of resources. It is also not intended to re-examine at this time the conclusions reached with respect to the information's benefits, including its usefulness and the associated assessments of interperiod equity. It's not intended to further evaluate the specific costs that to stakeholders that the existing approach requires. And so all of those things that it's not intended to do could be the subject or topic for future research if determined to be necessary by the board, really pending the outcome of this specific research. So this narrow research is really just seeking to look at what the effects are on expense. What would the difference have been if the recognition approach had been immediate recognition versus deferring the changes and recognizing it in expense over time? The reasons for this research have been somewhat discussed by Lisa, but our post-implementation review activities for pensions and OPEB indicated that there are costs and complexity for preparers and auditors associated with the existing recognition approach. As Lisa mentioned, that difficulty has been ranked high, either as the highest or second highest among a variety of topics. As noted, the costs often involve hiring third parties, actuaries, consultants to help maintain these numbers. And then participants also express challenges in understanding or explaining the pension and OPEB deferrals to elected officials and other stakeholders. So again, this specific research would be intended to support a potential future assessment regarding a practical expedient that could be established to alleviate some of those challenges without any significant changes to the information that's currently provided about pension expense. I'd like to highlight a couple of potential outcomes for the research. So if the proposed research indicated that there were minimal impacts to the amount of an entity's pension or OPEB expense, then the board could consider whether there could be a practical expedient. However, some of you may be wondering, well, what if the research shows that there's a really big difference if you took a different recognition approach? If the proposed research indicated significant impacts to pension or OPEB expense, then at that time, the board could consider undertaking additional research that could include looking at what the specific costs are to preparers and auditors. So diving a little bit deeper, extending that cost analysis on the current recognition approach. And then also what the impacts of the alternative recognition approaches would be to users, specifically for those users for information about pension expense or OPEB expense. So those things that I mentioned that this research is not intended to do could be the subject of future research if this research showed that there really would be a significant difference in the numbers based on recognition approach. When we're looking at the specifics for the research plan and timetable, what we're proposing is that we would compare for a sample of governments and for a certain number of years, pension expense as currently reported to what pension expense would have been under an immediate recognition approach. We are proposing a multi-phase approach with the first phase focused on the Statement 68 pensions, so pensions that are administered through trusts that meet the specified criteria. That's the group or the population that has the most data available at this point, so we would start with that group. And the first phase for that group would be developing a comprehensive research design. So we acknowledge that there's quite a bit of complexity and it's important to get the research design just right. So the proposal would be that between now and the end of the year, or between, if the board chooses to add the research and the end of the year, the staff would home in on exactly what the sample should be, what specific measures should be considered, and how we would collect and analyze the data. This research would be limited to looking at only the components of pension expense that result from changes that are currently reported as deferrals. So those are the actuarial experience gains and losses, changes of assumptions, and investment gains and losses, as well as some individual deferrals for the cost sharing plans. And so there's a need to isolate those measures from the rest of pension expense to make sure that we're really looking at the effect of the deferrals. So again, that first phase would be for the Statement 68 pensions, and the first phase would be developing a comprehensive research design. And then once that design is developed, we would have a better idea in terms of a timetable to execute on that research in terms of how long it would take to collect and analyze the data. So we would expect to propose a timeline after the first phase, a more extensive timeline after the first phase is completed. With that, I will pause for questions, and then if there aren't questions about the content, then I will pose the discussion questions.
Questions for Emily? All right, I think we're ready for the questions and materials.
I think we can take 1 and 2 together. So the questions are, should the board initiate a pre-agenda research activity to analyze the effects of reporting deferred outflows of resources and deferred inflows of resources related to post-employment benefits on pension and OPEB expense? Why or why not? And then secondarily, what feedback, if any, do you have regarding the specific research plan and timetable described in the proposal?
David?
David Goldman, National League of Cities. Yes, we emphatically support initiating this pre-agenda research. And since it was highlighted by Lisa, the GASB project manager, that the research is not to take into account the costs related to taxpayers, I cannot say that the current approach is burdensome and costly for local governments, and we would welcome any research that may indirectly lead to future research that would help alleviate this burden through some sort of practical expedient. For the second question, we do Support the plan to evaluate the effects on an individual entity basis rather than an aggregate. Our constituent, elected officials need to understand how these accounting alternatives will impact their specific local government's reported expense, not just, the macroeconomic averages. And we also support the plan's approach to initially focus on pensions. And if, because pensions have a more robust data set, but if things are revealed in phase 2 that develop a viable, practical expedient for pensions, we would encourage GASB to not delay pushing that forward to OPEB as well, because they're similar. They're different, but they're similar in nature. So if one thing can help pensions, it probably could help OPEB too. So,
Jamie?
Hi, Jamie Wayman, National Association of State Retirement Administrators. To the first question, yes, I do think GASB should embark on this pre-agenda research. I do feel that it should be included in the broader research effort to assess all types of deferral reporting, such as a review of GASB 63 or 65 and the individual statements that permit deferral accounting, such as Statement 53 for derivatives and OPEB and employer pensions. Thank you.
Linda?
I'm going to echo those comments, chicken or the egg, defer flows in general first, and then dive down into the disaggregated components. In my mind, makes a lot of sense. But you're the technical experts in that domain. But I absolutely agree. Hit 63, 65 first, and then start trickling down to those disaggregated components could be quite useful and impactful.
Bob?
Bob Scott, GFOA. Yes, I believe that we should examine this when we talk to the committee. I mean, deferred inflows and outflows are the least understood item for elected officials. They just have no idea what they really are or how they impact things. And so I think this would be a good project to look at what the impacts are, and the timetable appears reasonable.
Michelle?
Michelle Waterworth, AICPA. We did not strongly support this only because we strongly supported, I think as Linda and Jamie said, looking at deferred inflows and outflows more holistically instead of starting at what I think is a granular level and then maybe looking at it differently.
Scott?
Scott Davini, AGA. Yeah, we support the research. Sounds great. It's given the PIR results. I feel like it just makes sense to honor that and follow up on it. And just very thankful that the project is pension and OPEB, because a big value of those standards originally were that they were parallel. So glad to see that parallelism is being maintained.
David, do you have any other feedback? Okay. So Rob Hamilton, NASAC, our group was a little bit split. We had some folks that said it's a mature process, it's known, maybe more so amongst our group than some others. Certainly the survey results indicated that, so they were in favor of not pursuing this. For me personally, I think the survey results were persuasive, and this being responsive to the PIR research, I think is important. So moving forward with this, I would be in support of that. As far as timing, one of the considerations is it looks like there's going to be some engagement or outreach with some individuals. I know that for our group, that time frame of June through November tends to be very focused on Act for Development. And so there could be some individuals that may not be available during that time frame. I'm not sure what kind of flexibility there may be or what the request of their time would be, maybe more importantly, but that was just an area that was flagged for mine. All right. Well, thank you very much, Emily and Tammy. Yeah, we are really cooking with gas today in terms of timing. So the next up on the agenda is the report of the executive committee. So let me get that right. Okay. So we met this morning during the breakfast hour. So if you're wondering where a number of us were, we were meeting as an executive committee. And I want to also introduce who the executive committee is. So also we have Harriet Richardson, our vice chair, who started this year in the new role as the vice chair, and you're doing a great job. So thank you for your service there. Christine Brock, who wasn't able to make it with the travel issues, but she's a member of the executive committee. Scott Deviney, Rob Weber, Michelle Waterworth, and Elizabeth Thomas. So thank you for your service on that executive committee. Lisa Parker and Joel and Alan also sit in and give feedback about how the GASAC is operating. So the things that we talked about this morning were discussion of the GASAC chair priorities for the year. Really, it's just continuing to have the discussion that we had. Yesterday was a great example. I know that's been talked about a number of times. Such robust discussion, so much preparation that has gone in it. The conversation has been so fruitful. That has been a priority of mine since I was given the opportunity to serve as the chair, and just been so pleased with the caliber of conversation that's happened. So really just looking to encourage people to continue doing the good work that they have and engaging in the conversation the way that you already have today, and then as it goes on for the rest of the year and into the future. We talked a little bit about how the GASAC is functioning. We all thought it really was functioning quite well. It was mentioned earlier, and I wanted to echo those comments too. Disagree without being disagreeable. Alan, you mentioned that, I think attributed to Linda, and that's such a apt characterization of the conversation that's had around here. And so that's a real testament to the professionalism and character of the individuals that make up this council. So kudos to all of you and how we're able to give feedback in a meaningful way, because we're not always going to agree, and that's okay, but that we're treating each other respectfully, again, without being disagreeable. Talked a little bit around the prioritization exercise and how to make that as effective as possible, knowing that it is time consuming, but also we're really trying to communicate to the board and the staff as here's the things that we want them to spend time on. Not just that it's interesting or, hey, this is an area that maybe to discuss a little bit, but actually spend time, effort, resources on adding this to the technical agenda. And is that really what we want? So how can we come up with ways to make sure that's really clear for all members of the council to be able to go back to their constituency groups and make sure that we're all on the same page as we're offering up what our priorities are to be able to better inform the GASB and the staff of the areas that we want them to spend time on. Talked about the new GASAC members. We have the four, Linda Ragland, Tyler Montana Prescott, Sam Rippon, Jamie Waymeyer, and just how much you both jumped in. All four of you have just jumped in. I mean, Alan said it so well. No one could think of a time where all new members had contributed in the way that you have in the first meeting. This can be a little bit intimidating, and you are all just so confident in the ability to jump in and contribute. So just wanted to thank you for that. Thank you for your mentors that have helped you feel comfortable, and also to the people that had served in your role before you, because I know there'd been a lot of outreach to those individuals to help you feel prepared. So just really grateful for the new members and how they've contributed in the meeting already. Talked a little bit other business. There wasn't a whole lot, and then we pretty well adjourned. So it was a productive meeting, but not the lengthiest of meetings at the same time. Is there any questions about the executive committee meeting? All right. Oh yeah. Well, we'll come back to that. The other item just wanted to flag for individuals is it's in your packet. It is the upcoming schedule for the GASAC. So June 22nd and what is our next GASAC meeting. It was scheduled initially to be 2 days. It is now 1 day. There's going to be a public forum related to the infrastructure assets projects. Hopefully everyone, or you're all, dare I say, invited to participate in this, in the public forum. Having served on one, they're a great opportunity just to engage with the board around the project. So I would encourage you to consider, as you're going back to your constituency groups and being able to provide feedback through those public forums. So the next day, so June 23rd will be the public forum. So our GASAC meeting will be a single day meeting on June 22nd. And then we also have October 26th and 27th as the fall meeting. All the meetings this year will be in Norwalk, Connecticut. I know a couple of times we'll move around to some different spots. And then also importantly, just wanted to highlight for the 2027 calendar so you can get those on your calendars as well. It's incredibly important that we all, I know it's a lot, there's a lot of time and effort, but getting to the table and attending these meetings in person is so valuable. So just want to make sure that we can carve out those times on our calendars so things don't get double booked. So just wanted to make sure to highlight what the calendar is for the next year or so. Lisa, is there anything that I missed?
So if you're wondering, how is this going to play out now? Because we are so ahead of schedule. When we wrap up here in the next minute, we're going to ask you all to go down to the lobby and we're going to take our GASAC group photo. We're going to take that photo in the same place that we did last year on that stairway right in front of the BLT Cafe. For those 4 new GASAC members, follow the leader. The leader will take you right down there, but certainly go to the lobby and I'll be down there and can show you where we're going to go. That should take us about 15 minutes. After that photo, we're going to come back up and we'll have lunch. We'll have an hour for lunch. And then right after lunch at 1 o'clock, we'll start back up with the GAAP structure pre-agenda research discussion. And then following that, I'll give you a brief update as to where the prioritization exercise fell out with results. And then we will wrap up this meeting and call it a day.
All right. Thanks, everyone. We'll see you. Follow the leader and now we'll get our photo taken.
Exactly.
All right. Well, that was a great lunch and phenomenal photo that's up around there commemorating our time here on the GASAC. And so thank you to the GASB staff for getting the photo taken care of and then sharing it with us. Next up on the agenda, we have the potential pre-agenda research, we have the GAAP structure pre-agenda research, and I'll turn it over to Emily.
Thanks, Rob. I'm actually going to pass it to Robert to introduce the topic.
My first official topic as a board member. Hey. And as a result, you know, given the length of the paper and the DM, I think I'm looking at 3:15. Is that? No. Okay, trying to be too funny. Anyway, the first phase of the pre-agenda research was previously reported to the council. And staff has a paper, you know, explaining where this is at. And we just want to emphasize that this is a pre-agenda research project. Your feedback today and during and any additional meetings during this phase is primarily intended to help us as the board consider whether a project should be added to the technical agenda. If the board does move in that direction, you'll obviously have more opportunities to comment about the specifics. The discussion memorandum that was included in your materials is intended to highlight some of the aspects of what a different structure would entail, what it might look like, how things are organized, how changes would be communicated, and so on. This is somewhat unique in recent history and in terms of having a due process document in the scope of a pre-agenda research phase of a project. So it's something a little new and interesting. So I will throw it to Emily and the team to go through it.
Thanks, Robert. Yes, so the materials that we have for you today relate to our pre-agenda research on the GASB's GAAP structure. The objective of this pre-agenda research overall is to evaluate the effectiveness of the GASB's current dual authority structure and to consider whether a single authority structure should be pursued. And so again, just as a little bit of a refresher, what we mean by dual authority structure is that the GASB literature is promulgated through both original pronouncements and has authoritative status as part of those original pronouncements, and then also issued through the codification, and that codification also has authoritative status. So those are the two sources with equal authoritative status. As background and as Robert mentioned, this pre-agenda research has been conducted in 2 phases. That first phase began back in August 2023 and was focused on the effectiveness of the existing structure. We primarily focused in the first phase on how stakeholders engage with GASB literature and how the dual authority structure is currently maintained. This past October, we did provide an update on the project to GASAC, and we covered some of the phase 1 research results that led the board to approve the second phase of research that we're currently in. The second phase that we're currently in is specifically intended to explore a single authority structure and what that structure could entail. And the discussion memorandum is a component of that second phase. It's intended to seek broad stakeholder feedback on some of the aspects of a single authority structure, including its source. As I think we've mentioned previously, also as part of the second phase, a consultative group was established as part of this for this pre-agenda research, and over the course of, I guess, primarily last summer, we held 4 working sessions with our consultative group. And that group really helped us to explore and refine various aspects of a potential single authority structure and informed the discussion and materials that you see in the discussion memorandum. So since that October meeting where we provided the update, the staff has developed a draft discussion memorandum. This discussion memorandum is a staff document that's, again, intended to seek comments from a broad stakeholder group at a relatively early stage of the project. Specifically, this discussion memorandum is intended to inform the board's considerations relative to whether a current technical agenda project should be initiated on this topic, as Robert mentioned. So today we are hoping to receive your feedback and input on the draft. Specifically, we're seeking feedback on whether the draft is complete. So does it cover and include all the topics that you think should be covered? Is it understandable? And does it pose questions in a way that will encourage meaningful feedback, including alternatives that the GASB should consider? And so with that, I will pose the only discussion question, which is what feedback, if any, do you have on the draft discussion memorandum that's presented in attachment A? And I'm also happy to answer any questions about the document or the project overall.
Thank you, Emily. Feedback? Stephen?
Stephen Stewart, Governmental Research Association. I thought overall the memo was very thorough and easy to understand. The thing that really jumped out to me, and maybe this could be highlighted in communications about the project, is on pages 2 and 3, there's a really great summary of the reasons why to consider this. And it goes through some of the reasons we've talked about here today, you know, eliminating confusion, kind of helping people to understand when revisions happen over multiple statements, you have, you know, you would have one place to look for that. And so to the extent that summary could be used in your communications with stakeholder groups, that might help to drive home the need for the project.
Scott?
Scott Devaney, AGA. I think the discussion memo looks good. Just want to express my group's strong support for this important project. Hope it goes forward. Thank you.
I'll say Rob Hamilton, NASDAQ. We also were supportive. Felt like it is complete, flows logically. So excited about this effort and looking forward to the results of the project, or if it becomes one, but hopefully it does.
It seems like we have a little bit of time. Maybe I'll pose one other more specific question about the draft. Just as we've sought feedback from the consultative group already, we're expected to hear the board's feedback later this week on the draft. And this may just be a matter of preference, but did you or any of your groups have thoughts on where or how the questions are placed? So as you saw in the draft, we have the questions in their totality presented in chapter 1. And then we have within each chapter the related questions represented in each chapter. And all of the questions have a place in each chapter except for the last question, which is a broader question about what other feedback do you have. Did anyone agree with that approach, or perhaps think they should only be in one place or the other? That's sort of been a point that's come up across our various feedback sessions. So just curious if anyone had any thoughts on that specific aspect.
I can tell you our group, we didn't discuss it specifically. Personally, I like the way that they're located after each chapter. I feel like it focuses the questions and the content that we just covered. So I personally like it, but any other, Linda?
I'll echo. I think the format and the way it flows, it looks really nice.
Any other comments? Last call. Well, thank you, Emily. Appreciate it. Ryan and Tammy. All right, so we'll move on to the next area of the agenda, which is to cover the preliminary results of the GASAC member feedback on the technical agenda prioritization.
Excellent. Thank you, Rob. So one thing I do want to stress before I give the results of the prioritization is that these are tentative results. And the reason why I say that is because we do, as you know, have many council members who were not in the room today going through this prioritization exercise. So they didn't get and some of them didn't even get the benefit of discussions that we had yesterday at the GASAC table. So I am going to reach out to them after the meeting and give them the opportunity to listen once they've listened to the meeting to make changes just like you all did. So when I give these results, just know that they are tentative and there could be some changes based on whether or not there's any movement with their prioritization. So the top priority came in with digital assets. Number 2 was governmental fund financial statements. Number 3 was financial reporting entity, the look at statements 14, 39, 61, 80, and 90. Number 4 was GAAP structure. Number 5 was fund balance, the reexamination of statement 54. Number 6 was pensions and OPEB, the effects of deferred outflows and inflows of resources on expense. And I'll also give number 7 just because 5, 6, and 7 were very closely related. So number 7 is the use of technology in governments. And so tentatively right now, that's where it stands. As I said, there could be some subtle movements depending on what our friends who could not attend, if they make any changes.
Thank you, Lisa. I know there's a lot that goes into that. Thank you for you and the other folks and the staff that put that together. And I know you worked through lunch and others did too. So thank you for that. Okay, so we are at adjournment. We're 2 hours ahead of schedule, which is pretty incredible, but I know that there's a lot going on with travel. So I won't prolong this other than to just re-express my gratitude to each and every one of you. I wish you all very safe and an easy travel back home. And thank you for all that you've done to make this a successful meeting. And then our next meeting will be on June 23rd. Or June 22nd, thank you. That's what I get for going off of memory, but June 22nd here in Norwalk. And again, wanted to encourage people to look at that public hearing around the infrastructure assets project and look if you're interested in providing feedback on that. All right, safe travels and thanks again, everyone.